But joining us right now by phone is John Carney with Breitbart.com. He covers Wall Street and finance. He's been on CNBC, is the founder of NetNet. I mean, we're very grateful for your time today, John Carney. Thank you for being on.
Thanks for having me.
Praise be to God. Let's talk about the economy and inflation. We were just discussing with Josh Mercer from CatholicVote.org about the President's State of the Union. In his State of the Union, I think we should start there. He talked about inflation quite a bit, knowing that it impacts Americans, especially middle class and lower class Americans, dealing with the gas prices, grocery prices, housing is up. I mean, inflation is no longer transitory. It's here to stay. He didn't mention trillions of dollars spent. What say you, John Carney?
Yeah, I thought that the president is in a tough place because, frankly, one of the major drivers of inflation was the decision to spend so much money last year as it was clear that we were already coming out of the economic slump caused by the pandemic. So the employment was already returning faster than expected. We had vaccines. We had people were getting back towards a beginning of a semblance of normal life. What we didn't need to do then is spend, nearly $2 trillion extra dollars in order to juice the economy. They decided to do that, and they actually had a lot more plans to spend even more. And I think the combination of the actual spending we got and the announcement that we were going to have giant deficits for at least the next 5 years was what really sort of set inflation rolling at this much faster than expected pace.
It boggles my mind a little bit. I'm not a smart man, as one prophet used to say, Forrest Gump. I'm not a smart man, but it just seems to me like why would anybody in America, no matter their political bent, their agenda, or whatever, why would they want inflation? Why would they be happy with it? Why would they accept it as normal? Why wouldn't it bother people on the left and the right? It seems to impact us differently based on how we vote. Do you see it that way, John Carney?
I think what happened was that they were in denial at first. When I first started writing about inflation, and I specifically started calling it Bidenflation, because I thought that a huge part of the genesis of this price surge was on Biden. When I first started writing about this, I was told, no, there's no real inflation happening. And I could point to numbers and people would say, no, that's just like used cars. Don't worry about it. As I tried to explain at Breitbart.com, and we put out a nightly newsletter. It's free. Everybody can subscribe. And I do a lot of analysis over the past year of this inflationary surge. And one of the things I try to explain is very often inflation starts concentrated. So you'll get the money moves into the place where prices can move quickly, before everything else. A lot of things don't reprice quickly. A can of soup on the grocery store isn't going to get repriced every day. It'll get repriced when the new stock comes in. Other things can reprice pretty quickly. They have very liquid prices, as the economists say. And used cars is one of those things, because used car dealers are always trying to sell it to somebody for the most they can. So they're basically repriced in real time. So what we saw is it started in areas where you could move prices very rapidly, and it spread to everything else. But everybody from the Federal Reserve to the Biden administration actually read it the other way. They said, it's just a few areas. It's not going to spread to the rest of the economy. And that turned out to be dead wrong.
Yeah. I mean, let's talk about gas prices here. $3.30 a gallon. And yes, I am holding a grudge. I mean, this is in the state of Texas. I just paid that in Houston, Texas, where one of the largest refinery systems exists in our country. And $3.30 a gallon. Over $5 a gallon in the state of California. It's utterly mind-blowing to me. While we're not shutting off Russian oil that we purchase, we bought Iranian oil, but we are denying drilling. Why would we do this when it's $107 a barrel?
Yeah, it's foolish. It's actually higher than that. As of this morning, the international standard is at about $115 a barrel.
Wow!
And it is going higher. I don't see anything to put the brakes on this. The Biden administration has been very clear that they want to move the entire country off of fossil fuels, Well, you know what? We can turn on some pre-existing rigs, but to really ramp up production to anything like we saw just a few years ago, you would need to have people be willing to invest more in expanding production. Well, when you have half, the political, one of the major political parties in the country declaring that it wants to end the use of fossil fuels, who wants to invest in a 10, 20-year investment in an oil field when they're telling you basically they're going to shut you down? So I don't think we're going to see a ramp up in production. Normally at this price level, we would see people pouring money into oil. People aren't going to do that because they're afraid of what's going to happen down the road.
John, there was a report that several countries were going to release oil from their strategic reserves. Do you see that as being a way to reduce the prices of gasoline in the short term?
No, it's like standing under a waterfall with a Dixie cup. You're not, the amount that they're reduced or taking out of the strategic reserves is about 3 days of the U.S. alone's total use of oil. Huh. So it is a drop in the bucket.
Wow.
It will not make a big difference. If this was just a temporary problem, then yes, you can symbolically make a difference by releasing some oil and say we're going to try to hold the prices down. But it doesn't make a difference when, first of all, even without Ukraine, there were fundamental forces, low U.S. supply, rising global demand that were going to push up the price of oil. Ukraine has added another element to that because people are worried that we're going to lose the Russia supply.
Well, let's talk about long-term impact here. I mean, again, I'm not an economist. I don't reading the signs here and trying to predict what's coming, but I have a family to take care of, and $3.30 a gallon is pretty significant, let alone the impact of the grocery store. What are we looking at here? Is it possible to reverse this trend? Is it possible to bring us back to something more normal, or is this here to stay and it's only getting worse?
I think the president could have made a difference in his State of the Union address if he, just as he said, no, we're going to not defund the police, we're going to fund the police. If he said, we're not going to destroy fossil fuels, we're going to invest in fossil fuels. If he reversed course and bucked his party's extreme elements and said, I think that could have actually encouraged investment and would have brought down the price of oil relatively quickly. Because remember, oil is priced. These are oil futures we're generally talking about, which means oil for delivery a month from now. So one of the things that people are doing is trying to figure out what is oil going to be worth in the future. Well, if you think that there's a potential for a lot more oil to come back online and even be, maybe even favored by the U.S. government, the oil price will come down. So I think that could have made a difference. I'm not sure that we now know that, he didn't say anything like that. It will be very hard for them to back off their anti-fossil fuel position. So I think the price of oil is going to keep heading higher, and that will have serious economic consequences.
Right before we went to break, you were laying the hammer on us here. You're saying you don't see it's getting better anytime soon. You really think it's going to get worse. Can you describe what that looks like in the next 12 months, let's say, 6 months, 12 months? What does worse look like?
I think that it's very likely that we will see gas going towards or oil going towards $150 a barrel rather than back down towards the $70 a barrel where we were before this crisis began. It's hard to predict exactly where it goes, but this has enormous economic effects. For one thing, psychologically, gas prices are some of the most obvious prices in the world because, one, you have to fill up your car, so you're paying those prices. Number two, just driving down the road, you see that, there's very, very few prices actually posted changing daily in front of our eyes. But we can see that, and that has a psychological effect. And then just almost as a matter of physics, the more money you have to spend at the gas station, the less you can spend at the bookstore, at the grocery store, at the clothing store, for your kids' shoes. So it actually cuts down on other spending because so much of it is going into fuel your car. Hopefully we're getting through winter, so less will be going through, into heating houses. But this, having I would say one estimate I've read is that every $20 of oil price actually shaves a few percentage, not a few percentage points, but a few tenths of a percentage point off of economic growth. So that's what we're going to see. More money going into oil, less money going into the rest of the economy.
Well, let's talk about the jobs. That's something President Biden mentioned in the State of the Union. He touted his economic recovery. He said he created a ton of jobs. There was some like 800,000 job swing. I saw this in one of your articles over at Breitbart. 800,000 job swing in like a week or something like that. Like, what accounts for this?
Yeah, so one of the things is it's become very hard to track many parts of the economy, including some of the most basic, like how many jobs were created. So ADP, which is a payroll processing company, probably a lot of people listening right now actually have their payrolls processed by ADP. They try to estimate how many jobs are created every month. Their original estimate was that we lost 300,000 jobs in January. When they revisited it this month to recalculate it, they said, no, we gained 500,000. So that's a delta of 800,000, which is, incredible revision, right? It's a complete reversal.
Is it trustworthy?
I think right now that a lot of economic data is possibly suspect because we've never had a situation where we shut down huge parts of the economy, reopen them, and then other parts of the economy are literally subject to, a CDC mandate that changes month by month. So, can you go to the movies with a mask? Well, who wants to go to the movies, sit for 3 hours and watch one of these movies with a mask on? So then people don't go to a movie. Oh, wait, well, you can go with that mask, but, you've been out of the habit of going. So we've never had this kind of on-off, light switch economy is the way I think about it, where, and that's different all over the country, too. In some places you're much better off. Up where I was until very recently in New York, it felt like, you weren't allowed to stand outside, in an open field without a mask on. So, down in Florida and Texas, there was a lot more freedom to, mingle with other people.
Amen.
So I think this actually has made it really hard to read the economy.
Mr. Carney, you talking about that reminded me of the fact that leading up to the election of Joe Biden and then soon afterwards, many people were talking about predicting, we had an artificial suppression of the economy, an artificial suppression of jobs, and therefore, once we start moving forward, everything's going to get lifted and the jobs are going to be soaring back and economy is going to get right back to normal. Yet we see the exact opposite happening. And you talked a little bit about some of the habits of consumers, but what do you think explains how this works or how this happened?
So two things that happened. One, we did get part of that. We added back many jobs into the economy, in part because of that light switch effect I was talking about. There were a lot of people who, if you worked in a restaurant, you might not have had any work at all, so you were counted as unemployed. Then the restaurant reopened, so they were begging for you to take your job back. On the other hand, we have millions of people who have not re-entered the workforce, and there's probably a few reasons for this. One of them is that some people just decided to retire early. They were 2 or 3 years away from retirement, and they said, you know what, I don't need to go back. I'm okay. I'm not going to go back. So that took some people out of the economy. We did pay a lot of people a lot of extra income through the enhanced unemployment. So some people probably still, even today, even though it's been months since we ended this, some people are probably saying, you know what, I'm okay right now. And then finally, I think other people are trying to decide what they're going to do. They may have moved, so they're no longer even near where they wanted to work. If they were, we've seen a big shift out of center cities into suburbs and rural areas. And so some people may still be out of the workforce because they haven't figured out how they're going to work in the place they want to live now.
Yes, I read a report that there was a lot more people saving money, and so they're able to maybe just kind of coast along a little bit longer. But I'm wondering, there was an escalating rhetoric on the part of President Biden during the State of the Union address in relation to the Russia and Ukraine conflict. And I'm wondering if you could speculate as to what we could expect from the economy if, God forbid, we become more involved in this war.
So one estimate, not my own, is from analysts at Bank of America, who I think actually have done a pretty good job of reading how the oil market is doing. They've said that if we lose all of the Russian, meaning so if it escalates a lot, we probably lose all of the Russian oil from the global oil market. If that happened, we would see the price of oil go to $200 a barrel.
Yikes.
I don't think that would last for very long. I think in that case, you would see OPEC in particular decide that they wanted to take some of that, extra money and start, increasing their own production. And so therefore that would bring down the price of oil. At some level, I think we would get some of the U.S. shale production ramped up, because at $200 a barrel, almost anybody who has an oil rig can, be very profitable. So you get that thing going. I don't know if we'd see that much extra investment, because again, what people are really worried about is getting crushed long term, either by oversupply or by government fiat. So I don't think we'll see that much extra investment, but we'll definitely see existing rigs start to ramp up production.
One of your very latest article over at Breitbart says Russia got canceled and China got the benefit. You're saying that China stands to make a great payday here with the suppression of the economy in Russia with the sanctions. How does that work?
Right. So if the rest of the world treats Russia like a pariah state and won't buy its oil, won't sell Russia technology, well, there's a country that doesn't produce its own energy, that's China, that will happily buy Russian oil and that does produce a lot of technology and would happily sell that to Russia. So China actually stands to benefit greatly from the rest of the world shunning the Russian economy. And we're seeing that right now beyond even the economic sanctions. Companies are just pulling out altogether from Russia. Well, if China will probably be more than willing to step in and fill that gap, especially because there's not a lot of transparency there. We don't know exactly how much China is selling to Russia. And so I think that this is both going to drive China and Russia closer together, but also be very, very economically beneficial to China.
Wow. Oh, we're down to a few minutes left with John Carney from Breitbart, Breitbart.com, and he's got a host of great articles over there. I encourage you to check them out. I want to just go back to the U.S. economy here, and we were talking about this offline here. We're seeing a lot of very crazy things happen in the way we control business and economy in our country. Big boxes in 2020 took off. Big box stores made a killing. Amazon made a killing. The pharmaceutical companies made billions, obviously. The small business owner took a beating. And now we're seeing trends where they're starting to be able to control who gets to play and who doesn't get to play. ESG scores at banking institutions and those kinds of things. Picking the winners and losers. How do you see that moving forward?
I think that's a problem that we actually really need our politicians to step up and confront. And as consumers, we need to confront this idea that companies like BlackRock, which is the world's largest asset manager, have said that they are going to start pushing the ESG agenda on the companies that they invest in. I think that can be very bad. I think just the sense that the government has as much control over the economy as it's shown it did during this whole pandemic episode, I think that also hurts investment. Frankly, if I were somebody wanting to start up a small business, I would be worried what happens when, without a vote, without any real public deliberation, the government can just declare entire parts of the economy closed for the foreseeable future. I think that's really troubling and is going to hold back investment. Particularly small businesses have been less able to deal with this because they tend to have much tighter margins. And finally, inflation tends to help bigger businesses because they have more bargaining power with their suppliers, and so they can pay a little less for their items. And so, yeah, they're going to raise their prices. That increases their margins. Very often, that's what happens in inflationary periods. the margins go up faster because some of the prices don't go up quite as fast.
That was the other thing President Biden said in his State of the Union speech. Greedy capitalists should not raise prices, just cut their costs. Oh, wow. At the wave of a wand, I suppose that's how that works. At any rate, John Carney from Breitbart, thank you for your time today. We're very grateful for your insight, sir.
Thanks for having me, guys.
All right, praise be to God. That's going to do it for hour number 1 of Catholic Drive Time. Thanks for hanging out with us.